All right, we have sentiment back down to the FTX lows. We're right back in that bear market territory when it comes to at least the sentiment of the crypto markets. So in today's show, we'll talk about whether it is going to be as long as what we saw at the FTX lows before prices start to reaccumulate and move towards the upside, or could you possibly see a quicker recovery? Well, I think that really depends on where we are within this crypto cycle. And that's what we're going to talk about in today's show. Smash the like button, hit the bell notification, and definitely subscribe to the channel if you're not already subscribed. There is a little bit more relief today, right? You're getting a little bit of a bounce within the markets, which is always expected after a strong drawdown. There will always be some profit taking from the short traders. But the question is really, are the bears still going to be in control following this next bounce? That is the major question, right? We've got two very different pictures when it comes to these markets that are have a tendency to be highly correlated, right? The two differences, stock market continues to go towards the upside on all fronts. Literally S&P 500 printing another new all-time high each and every single day. New all-time highs over there on the stock market. Nasdaq, new all-time high. Dow Jones over here, not yet at a new all-time high, but it looks like it's pretty much set to soon break out into new all-time highs once again. So what is going on with crypto, right? If you look at crypto and crypto-related stocks like, of course, MicroStrategy, well, this is still coming down towards those low levels, trying to reaccumulate. Looking back at Coinbase over here, well, Coinbase looks similar to the total cryptocurrency market cap total 3, that is where you broke the neckline over here of a cup and handle formation and you're kind of back testing into that zone. And it really is a do or die situation where you would want to see this getting moving. I will remind you as well, when you do have a look at Coinbase over here, you can see there was a fair value gap within this region and you've actually back tested and hit that level. So therefore, that means you have a very easy invalidation on Coinbase if you did want to take a trade and this were to play out that full trade position. Well, it would look something like this, right? So literally it's as easy as this. This is the setup that I'd be looking at. Now, this is a pretty large risk to reward ratio. Remember, the bigger your risk to reward ratio in terms of how much you're getting rewarded for what you're risking, the less likelihood that it will play out because you have a smaller margin for error. But does the trade make sense? Absolutely, it does make sense because you've already filled that fair value gap on this candle on Coinbase that came in on the 13th of January, which means you wouldn't want to see price go back below that level. So giving you a super simple at least approach to scale into this trade. You can, of course, zoom in and get a little bit more technical about it using those daily wick lows to try and better pinpoint your exact levels, or you can wait for strength to come back into the market and rather enter higher and use this recent lows in invalidation. But I guess that's the purpose of the show, right? I'm here to help you get a couple of trade ideas. So if you do appreciate that, again, smash the like button, guys. It helps to get the show content out. YouTube works on an algorithm. All right. So now that we've got that out the way, we know that there's this kind of decorrelation at the moment between crypto and the stock market. Will it last? Typically, it doesn't last very long. We have seen these periods where they can seem decorrelated for short periods of time, and then you tend to play some sort of a catch-up. Now, no doubt, we have been speaking about this for quite a long period of time. The altcoins and Bitcoin are two different ball games right now. Bitcoin is lagging the stock market and is the most likely to catch up. Where the altcoins will catch up is a whole nother ball game, right? We've seen altcoins get absolutely wrecked. Now, an interesting thing that we've also been looking at in terms of traditional markets, which we actually covered yesterday on the whale room sessions that we had in the live Zoom, is I noticed something pretty interesting, and it lines up as well with what we're seeing fundamentally with regards to the Department of Government Efficiency, Elon Musk's Doge department, looking into whether they actually have the physical gold backed by the reserves, right? There's one of the things that they're looking into. It's kind of become a narrative. And there's this speculation that if they don't, maybe people will lose faith in gold and they'll be more inclined to move into Bitcoin, right? Whether that plays out or not doesn't matter to me. What's more important is to look at the gold chart. And something very interesting over here is on a yearly scale, we're literally coming onto the TD sequential 9 top. Now, the sequential usually looks at 9 consecutive candles in a row. And then you look for a pause or potential reversal within the trend. Could be anywhere between 1 and 4 candles down, and you're currently on that 9 top on a 12-month time frame. Then if you go through onto a 3-month time frame, well, you actually see something similar. You're also on a 9 top on the quarterly, so 3-month time frame chart over there. And then if you go into the weekly, well, you're also coming up onto a 9 top, which will be next week. So very, very interesting the way that the fundamentals do line up. And what we have seen previously is we've seen once gold does actually put in its major top, that is usually where you get a bit of a catch-up trade from crypto. So the pullback within gold tends to lead into a crypto rally. So there is just a little bit of additional hopium for you. You need to be really careful with the fine line of hopium versus reality of what's happening, a transition into a bearish market versus what's true hopium. Always make sure you have your invalidations within the market. So if you do want to trade these things, right, you can trade gold, you can trade that Coinbase chart as well over here. All of it is listed on BTCC. You guys were asking for a long time for a crypto-friendly platform, something that trades with the same interface as crypto. So here it is, right? You have BTCC, there's a link in the description below, and you can have a look at all the various different pairs. They have crypto stocks, forex pairs, commodities, all the various different ecosystems over here. So if you want to trade Coinbase, any of these things, Tesla as well, all of that is listed over here. There's a link in the description below. You can get a sign-up bonus depending on how much you deposit. It is up to $10,000 that you can unlock. And the most important thing is you don't need any KYC. So if you were someone that wanted to trade stocks, most of the time, 99.9% of the time, you have to KYC. This is the one occurrence where they're doing tokenized stocks, and therefore you can trade those. So remember, this is perpetuals, right? Perpetuals. So there's a link below. We are giving you trade ideas as well. If you come into the Whale Room Discord over here, we've been trading it over here. You can see we have a new trader in there that specifically focuses on stock trading, trading the NASDAQ on the daily, right? And a daily open for, or at least the New York session open for the stock market. So what could be the saving grace? What could be the liquidity? One thing that we've been looking at, which is starting to show some signs of life and promise, is, of course, the DXY, which we really want to see break back into this clean trading range. It's been crystal clear, perfect. And you had the deviation over the top, you've broken back inside. And now we just need to see a couple more things for rejections, right? And if we look at this over here, we have the high, we have a low, we have a lower high, we now have a lower low. We're looking for the next lower high, which if you do on the DXY, get a bounce up over here. One area of interest that I'm focusing on is the rejection off of this downsloping trend line over here, which simultaneously seems to be lining up as well with that 0.382 FIP. Now, that is usually the point where both bulls and bears take control, depending if you're trading the market down or up, but it's the 0.382. If the bears are going to be taking control over here on the DXY, you would want to see that push up into here and weakness, a rejection into that downsloping trend line. And then you want to watch this start to break down. Now, if that does break down and simultaneously you do put in that major top on the gold chart, or at least a pause within the gold chart, that could actually allow for that catch-up phase within crypto. So we need to see a lot more, a lot more, right? One thing we need to see is we need to see a proper breakdown over of the USDT dominance, which we did say at the moment does look more bullish than bearish, which is theoretically not a good sign. Why does it look more bullish than bearish? Well, you've had a perfect back test into the long-term diagonal, which is pretty much marked every single top within the crypto market. Every time this has come into here, into these territories, this has been a top within the crypto market. So you've come back into that. You've tested that level. You've also tested the downsloping. You've tested the horizontal. You've got basically triple confluence over here with diagonals and horizontals holding a support. And it looks to be putting in a high low, which could send prices higher. If that does happen, I'd be looking for major weakness into this zone over here. This is going to be a big fair value gap as well. Let's just see if it wasn't already tested with that candle. Narrowly missed it, right? Narrowly missed it. But this area over here is going to be a major resistance zone. So that could lead to one more peak up. And that's the only thing you need to really be careful of, right? So as the DXY pushes up over here, just be observant. If the DXY pushes up over here and you have the USDT dominance following suit, that will create a little bit more damage in the crypto markets. We'll show you what Bitcoin looks like and where I think Bitcoin will hold up. Altcoins may come down and test some of those lows once again, but I'd be looking to transition. You're looking for the basically the worst damage to be done in that environment. Hopefully you see something like that. Even better yet, hopefully you just chop about and break back into the trading range already. I'm just simply outlining the possibilities and the risks. That is what trading is, right? You're creating multiple different scenarios. If X happens, I'm going to do Y, right? And if Y happens, I'm going to do Z or Z, depending on where you are in the world, right? You're coming up with multiple different options, come up with a trading plan. So where are we within this crypto cycle? You let me know. There's a poll which is currently running in the comment section. I want to know your thoughts. I mean, for me, there's only a couple of options that I could really suggest where we're at within the cycle because of the sentiment. I think we're not in euphoria. I mean, that's pretty obvious. We're not in thrill. We're not in belief. I don't even think we're in optimism. So really the only opportunities or places where we could possibly be is this. I could only label a few because we only get 4 options to put into the poll. So I chose the most relevant ones. Go through, vote over there. But you let me know as well in the comments. I'm reading there and vote on the poll. We could either be in, disbelief phase, before a big move up over here. We could be in panic, capitulation, anger, or depression. Those are really the only options. Maybe hope on Bitcoin, right? Hope on Bitcoin, a recovery is still possible. You let me know. I think that for Bitcoin, there's a good chance that, we in hope. I think for altcoins, though, we in anger. This is the sentiment that probably most resonates with what I'm seeing over Twitter. What that means for your recovery plan is that, unfortunately, it does take time. If you do look at a chart like this, and it doesn't mean that the price is going to match 1 for 1, but what you typically see, because I think we've seen this, right? We saw denial already. My investments are with great crypto projects, right? Amazing, strong crypto projects. They will definitely come back. You always got to move into the fundamentally strong coins. We hear this over and over again. That is your denial, right? That's your coping mechanism. Then you lead into panic. Everyone's selling. I need to get out. What the hell's going on over here? Then you get into capitulation. I'm getting 100% out of the markets. I can't afford to lose more. We've seen that, right? How many people have completely left crypto? They said, I'm done with this. Never again. I'm not trading crypto ever again. It's not worth it. We've seen that. And then you lead into anger. Who shorted the market? Was it Dave Portnoy? Why did the government allow this to happen? How could Trump launch a coin? How could the president of Argentina rug us the way that he did? How could he not be more responsible? That is literally the exact sentiment that we're seeing right now. It's literally identical to what it says over here. Like, why did the government allow this to happen? So I think this is probably the absolute most likely outcome, right? So what you typically see following this environment is the market needs to digest the move, and that usually results in a lot of chop. This is where you need to be very, very careful, right? Don't get chopped in and out, in and out, in and out. That is how your whole count gets chopped up every time you lose a couple of percent here and there. Because what will happen, and I'm sure probably you've already been going through this emotional cycle, is as the market starts to show any signs of promise and green within the altcoins, you jump straight back in and you say, oh my word, here comes the V-shaped recovery. We're probably in this phase and we're about to take off into euphoria. And you quickly jump in for price to only come back down and chop back down. You jump out of your position. And what do you know? You've lost like 3, 4, 5%. You do that every single day, 5%, 5%, 5%. Before you know it, your account is down another 50%. So you need to allow for this phase to play out. This will be a ranging market over here. Try and long the bottom of the range low on the short time frames and try and short sell or take profit on the top side of the trading range and allow this range to chop and chop and chop. And then eventually you'll lead into depression, at which point prices continue to bleed. And most people will say, my retirement money is lost. How can we pay for all this new stuff? What an idiot I am to have thought that I knew how to trade these markets. I was going to become a professional trader. This is the sentiment, right? And then ultimately you start to grind up, and most people at that point are already still stuck with their mindset that, I'm leaving, I'm never getting back into crypto again. And then they start to see some life and promise in the market, and it reaccumulates. So it could be a few months. Now, of course, this is a little bit of a thumb suck because there's no way of absolutely with certainty knowing where the market is going to go. But I can only estimate that it's probably going to be in the region of over the course of March, right? Over the course of March, you're probably going to see some sort of a recovery coming into the end of that depression phase. If we look at where we are within this crypto cycle, well, you can see the BTC market cycle bottom over here coming into, let's quickly close that out over there, coming into this phase over here. So we are cycle 5, here is cycle 3 over here. You are reaccumulating over here and you're preparing for the next move up, right? So if we are to follow 2017 cycle, this could definitely be a bit of a bear trap, right? Shaking people out before the next big move. The total cryptocurrency market cap, we have seen in the past where we've had these periods, even within a bull market, where you get these flushes, right, towards the downside like that, where the super guppy goes from green into gray. And then after that, the market actually starts to move. So it's possible that you're in that type of environment right now. Just continue to monitor the charts. And as soon as you start to reclaim some key levels, that should be your answer. But what you need to see over here is if we are in fact in that type of an environment, you should see the market moving very, very, very quickly, right? Very, very quickly over there. We've seen more long liquidations. Once again, 200 million worth of long liquidations over there. The Bitcoin fear and greed index has now come back down into the fear. So we are seeing prolonged periods of fear, very, very similar to what we saw during that August period, right? If we zoom in over there, you can see the August period where Bitcoin went down to about, I think it was the lowest, $49,000. It must have been that point over there, somewhere around $49,000 was the low. You dipped multiple times into that greed zone before moving up. Volume still keeps coming down over there. We have the Bitcoin dominance chart over here, which is still showing more strength in the altcoin sector despite the short-term bounce that you are getting within the market over there. And really, this is where bulls need to take control, right? Otherwise, they continue to risk moving down into the gap over here, the high volume profile gap, which is between $77,000 and $85,000. So I could make the argument as well that you could theoretically take a high risk long trade over here, which would be trading it back towards the top of the trading range. This is going to be major resistance into this zone over here, but basically a hard stop below yesterday's low. Yesterday's low should also line up with the yearly open, which I'm going to show you on another chart in just a moment. But this does give you a favorable risk to reward trade, which would be a 4-to-1 risk to reward. Of course, you can go a little bit more conservatively, which would put it at a 3-to-1 over there, where you're targeting back towards the breakdown level at $100,000, where you might get one more spike up. So in the short term, that's basically what I'd be looking at. If you do have a long bias, you really want to defend yesterday's low, specifically on Bitcoin. The super guppy on the total 3 chart, which is representing the altcoin sector over here, is still on, at least this is on the log chart, right, which changes things a little bit in terms of the scale. But nevertheless, you are holding above those previous all-time highs. Remember when Bitcoin was doing this around that $69,000 level, there was a lot of similar sentiment, specifically around Bitcoin, and confusion about what Bitcoin's going to do next. But Bitcoin continued to grind it out and fight this level, right? And then you started to get the parabolic move. But it took time. It took much longer than people thought, right? This could be months that you spend over here. You could go all the way into Q3 consolidating into this region, and that kind of lines up with the sentiment, right? If you look at the anger leading into depression phase, this is a ranging market. It can realistically take time. So you need to be mentally prepared for that kind of stuff. All right, quickly going back onto this chart over here. So super guppy, the Gaussian channel that continues to remain green. It's all over if you break below this candle, right? If you break below this candle and you come back into the Gaussian channel, chances are that you're going to lose it. The whole thing's going to roll over, turn red. And at that point, the cycle is probably over, and it would have been the worst crypto cycle that we've ever seen, right? Bitcoin still holding up above those key levels. That looks good. We still have a recontraction over here as well in terms of the Bollinger Band width percentile. Stochastic RSIs are reset. What's interesting about that is if you also go back onto this chart, this is what typically happens, right? As you move through those phases, you can see on the top right over here, you go through the peak, which is the point of maximum financial risk, which is during max expansion as well, right? And then the market starts to recontract, and you go through the trough, right? The point of maximum financial opportunity, where you have incredibly low volatility. So now you're moving into the low volatility period, recontraction of the Bollinger Band, squeezing in towards one another, and then ultimately we're waiting for the expansion. So you're looking to gain your ultimate entries around these types of lows, right? All right. So again, just lining up that chart, I just showed it to you, the long opportunity on Bitcoin, which is still very, very high risk, because at the end of the day, you're bleeding out in a strong downtrend. But just showcasing it on this simple chart over here, this has been the trend line that's held price up ever since the lows at 52,000 and ridden up this entire run, right? So therefore, this would be the trade again. If you want the lower risk opportunity, you'd be running it up like that. So stop below yesterday's low. You'd be running it up to the breakdown level, which is only targeting around $102,000. Or alternatively, you could trade it to the top of the trading range, and that would be giving you a 4-to-1 risk to reward ratio. basically what I'm suggesting over here is that you need to see price move very, very, very soon. I personally don't want to see that low taken out. The bulls need to do something as in today or tomorrow, right? You need to see some sort of a move up. So no candles below those lows. Again, I said to you that you can have a look as well at the let's just quickly find that chart over here. You can have a look at the yearly open, right? The yearly open lines up at exactly the same place. So I think it makes a lot of sense when we go back on this chart over here to have your stops now raised from what I previously said would have been initially the stops were there. We had this candle come down. We said stops go there. Now we've had this candle which has been placed over here. I think it makes sense to place stops over there so that you can eliminate risk. Because if you do take out this level, you're probably taking out this level. And if you take out this level, you're probably taking out this level. And that changes everything, right? You start to move down towards those prior targets that we gave around that $83,000 to $85,000 level. So I think that's a sensible place, which simply lines up as well with that key yearly open, right? There it is. There's your yearly open. That's where yesterday's candle wicked directly into, and it tested that as support, right? The area that's been wrought with resistance and bulls are struggling at is the 50 and 200 EMA. Rejection, 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 rejection. 1, 2, 3, 4, 5, 6 times, right? We're going in for the 7th time. What I've noticed is that every single day, price rallies up into the New York Open. As the New York markets open, they dump it. I don't know if this is being controlled by Wall Street or what the story is over here, but let's see. This is again attempt 1, 2, 3, 4, 5, 6. This will be the 7th attempt of this level. Can they break it? If you can see bulls smash through this level over here today, hold by creating a high low, maybe that could be the end of the pain, at least for Bitcoin, right? Altcoins, different story. So if you can do that successfully, the alternative thing is that you're also going to be getting above 96,000, which means you're going to be getting above that RSI pivot level, right? As long as you're above the yellow line that's running horizontally, your RSI will trend towards the upside. So I still think that the bears won't get an entirely free ride like they have, in the sense that price will just bleed through into here. I still think you get at least one short squeeze, which is why I think that it makes sense to at least have a little bit of a long trade over there with a tight stop. And then if that leads into a lower high, maybe in the sometime in March, right? If you do something like this, maybe sometime in March, if you are going to come down to test that level, that's probably when it happens, right? So possible lower high over there, come into the zone, and then that's the end, right? That's the final flush. And then you'd want to see continuation. So that's just one trade idea that I have. And the reason for that is also because of these lows, right? Low 1, low 2, you now have 3 lows that become untested, but a lot of also highs that are untested, a big buildup of liquidity. So let's see if they'll induce FOMO one more time, spike it up, take out all these short traders, and then smack the long traders, right? That's kind of the general idea that I have over here. But we'll see how things unfold. I'm keeping you up to date in the Whale Room Discord alongside the other traders. You have Josh over here who's been shorting the market as well. Really, really good trade over there. Very, very good. So 369% profit. If you guys do want to learn more, this is the educational hub, right? This is where we give absolutely everything, real live trading. You can get started as well with a free $100 by using the link in the description below to CoinW. If you look over here, this is a free $100. Earn $50 when you open a futures account. That's all you have to do. Click the link in the deposit in the description below. I don't even think you have to make a deposit. Just open a futures account. Make your first futures spot trading with any amount during the period, and then you get another $50, right? And that's any amount. So it doesn't matter how much. You can put $10 in, and that's it. And then you can unlock up to 30,000 depending on how much you're trading with. So more on education. If you are struggling during this time period, join a like-minded community, right? We do have Whale School, which is coming up in 5 days' time. This is free, guys, absolutely free. By signing up as well to CoinW using the link below, this is your ticket in, right? And you don't even have to make a deposit into CoinW. You get that $100 over there for free, right? We'll start in 5 days. Join a like-minded community so that people can show you how they go through the hardships of trading, because it isn't that easy, right? There is always challenges. Anyone that said trading was easy is a liar. I'll see you guys all on the next one. I hope you have a great day. And let's see how the market unfolds. Trump is also speaking, I believe, later today. And I think we have some economic data coming out. So we'll see how that shakes markets up. I'll see you guys on the next one. Have a good day, everyone. And cheers for now.